Well, good morning, good afternoon, good evening. Hello to everyone out there. And yeah, look, we're a bit later than we normally are. Just a tad. We've had some interesting things going on, and Chris was going to play golf, and then it wasn't, and I decided to have a little bit of a sleep in, and it's all been happening. But as you can tell, it's only half the team again today. So because I was late, because I didn't think Chris was going to be up, Chris ended up going off and doing some other things, but that's okay. That's okay. We roll with the punches. That's what we do here. So we're just going to continue on and do what we normally do. And we'll have a bit of a chat about what's going on in the market, some crazy news, and Chris and I will catch up and do some other stuff later. So, where are we at this Monday morning? Not much has happened over the weekend, but we will have a look over the week because we're approaching our weekly close. So we'll have a look and see what the markets have done. And as we look right now, Bitcoin sitting at 10,400 US. Not much movement in the last 24 hours, but for the week, if we have a look over the week, we're up 7.8%, which isn't too bad. We can't complain about that. And there's lots of news things that's going on in that space that may be prompting Bitcoin price to continue to rise. Interestingly, the dominance has dropped just below 70. It did get up. Some places are reporting 73%. I didn't actually see it that high, but I've seen reports that high. But we have dropped back below the 70%, which means some of the altcoins are starting to come through, which is good for the industry. So looking across our top 10, what have we got? We've got Ethereum sitting at 181. It is up 2.2. It's up 4.4 for the week. We've got XRP sitting at 26.2 cents, up 1.1, only up 0.7 for the week though. Bitcoin Cash at 307, jumped over the 300 mark. It's at 2.2 for the day and up 8.8 for the week, which is a good jump for the week. Litecoin also holding above $70 US, 70.71, up 3.2 for the day and up 8.4 for the week. EOS is at 374. It's had a good jump, 4.7 for the day, up 11% for the week. So EOS fans will be happy about that one. We jump over Tether. It's again pushed out Binance Coin in the 7th position. Binance Coin sitting at 22.43, only up 0.1, but up 5.6 for the week. Bitcoin SV sitting at 134.95 and down just a fraz and up just 3.3 for the week. And Cardano sitting at our number 10 spot at 4.6 US cents. Up 1.9, up 4.1% for the week. So there's our top 10 for the week, mostly showing some good gains. So that's positive. And as I said, there's been a lot happening in the industry. Our market cap is sitting at about 266 billion, half, but still down about 0.5% for the day. But if we look at the Bitcoin chart for the week, well, have a look at the weekly chart because not much has happened in the last 24 hours there. But as you can see, we were down under the 10,000 at the start of the week, and we have had a good climb, and we almost cracked the 11,000 US mark. Got rejected, quite frankly. Got rejected quite strongly, and fell right back down to the 10.3. Seems to be some pretty good support sitting around 10.3, 10.2. It's come down there a couple of times and has been rejected off that support level. So at this stage, look, it's things seem to be still consolidating, still very choppy, not really making much decision. No one really knows what the impact of the new backed futures product is going to bring us. And look, I think there's been bit of especially in the last week, a bit of a rise, which is probably a bit of expectation, I suppose, for that futures product. But yeah, not too sure. We shall see. And so let's having a look. Latest Bitcoin futures market data signals a bullish price action. So Looking at, in particular, they're looking at Binance and BitMEX here. They're saying that they're doing a comparison of the inflow versus outflows for Bitcoin in particular, because that's obviously the main predeterminer. And for BitMEX, you can only, Bitcoins is all that you can only deposit Bitcoin and take out Bitcoin. That's all it works with. So looking at those figures, they're saying that the inflow has exceeded the outflow on those three key exchanges, and they believe that accumulation has started to occur. So while the prices have dipped slightly in the past 24 hours, the prices, as we've just looked at, is quite stable, sort of working within that range, and no real direction has been set, but the fact that there seems to be a fair bit of money coming into the space indicates that there could be something on the way. So we shall see what that brings. So crypto exchange, Binance.us is coming. So if you remember back a little while, Binance actually stopped access to a number of products for US people. And I think they've clearly been working with US regulators to try and resolve those issues and work out what the product needs to look like to satisfy the US regulators. And so this US specific exchanges obviously come out of all of that and their analysis and doing what they can to satisfy the US regulators. And that's a lot of that's around the KYC, know your customer requirements, which they've been worked on. And but again, and my argument around all this is that all this KYC stuff, it's not really helping, and in fact, it's making for us as individuals, all it's doing is it's putting more and more of our personal data out on centralized servers, which are targets to hackers, and quite frankly, it's just making our personal data less secure, in my opinion. And and to achieve what regulators are just trying to control everything and want to see everything, but there hasn't been much real foresight or thought into how best to implement that, and I think that's a real problem for us going forward. A new product being launched. This one's pretty cool, and Paxos. So they've also launched a different stablecoin, and in fact, they're working with Binance, I believe, to develop a stablecoin. But they've just launched PAX Gold, which is a regulated and redeemable product with gold, which is really fascinating. So it's an Ethereum-backed token, and they've announced the launch of the product and on September 5th, so just gone, and claiming that it's the first crypto asset redeemable for physical gold. And furthermore, that the New York State Department of Financial Services have put forward their approval of the issuance of an official statement defining it the first gold-backed virtual currency in New York State. So that's very interesting, and they're talking about some of the advantages here. And one of the statements was that in a digital and global financial system, owning physical gold is cumbersome. It's outdated investment. It's not easy to trade, divide, move, or leverage against other investments. So they believe by creating this coin, that's actually going to address a lot of these issues. They also talk about some of the risks. So if you're purchasing gold through unaccredited retail outlets, usually it's expensive, but it's also risky. And if you look at some of the reports around lately, that there have been cases where they've found tainted gold bars or gold that has been diluted with other metals. So there's definitely some issues out there with physical gold, and for a lot of people, it's a very it's not a simple process, or as simple as you'd like it to be. I had a quick look at their website. This is it here, Paxos Gold, and a tradable token backed by physical gold. So we can purchase it, trade it the same way as we do any of our other cryptocurrencies. So that we know that that's an easy process, and that works well. The other thing is they talk about some of the advantages. So there's no custody fees, which is really interesting. They've got a very low minimum purchase level. It's obviously instant because it's cryptocurrency. You can trade it and sell it as easy as the others. It is allocated, so it is yours. And because of that, you can actually redeem it. So you could literally walk into the PAX Gold's one of their offices or whatever, and with your cryptocurrency coin, the PAX Gold coin, you can actually redeem the physical gold for that coin. And as we've said, they are regulated. So very interesting product. I'm going to do a little bit more research on that, but I do like what they're proposing. It looks very interesting. So we'll have a look at that and see whether that's worth pursuing. Another article caught my attention: Bitcoin hitting 1 trillion market cap by 2025, entirely possible. Well, I think that's a bit of an understatement myself. I think not only is a $1 trillion market cap entirely possible, I think it's inevitable myself. And by 2025, I think it's going to be before that. And but look, I get their perspective in that it's they're saying, look, it doesn't need a big parabolic run like we had at the end of 2017. It could just be a nice gradual increase, and that's absolutely possible. Absolutely possible. And they said here that growth rates can go on for long periods of time without but we'll have an inevitable slowdown as they mature. And the implications for this trend line imply that the way that they've looked at it anyway, implies a $10,000 Bitcoin will remain a theme until late 2020, rising to 20,000 by February 2022 and 40,000 by May 2023, it reads. And it says that, recall that if nearly the 18 million coins quadruple in price, more than $500 billion of wealth will be created. That's more than possible, and the network could touch $1 trillion by 2025. Considerably more wealth creation lies ahead than has occurred in the past. Now, for me, I think that's a really conservative view, and it's something that I think is, to say is more than possible. I think that's one of the lower end predictions from my perspective. And look, you've just got to look at the wider economic chaos that's happening around the world. And as these current monetary policies continue to be put forward, as interest rates continue to be driven down into the negative territory, as global economies slow and go into recession, people are going to be looking for alternatives, right? And that's not even to talk about the people who the 3 billion odd people who currently have no banking facilities whatsoever, but are getting access to smartphones. And with a smartphone comes cryptocurrencies. A very simple way to get a banking-like facility on your phone. And so you combine those two key elements between the economy in more of the developed worlds and those individuals that currently have no access to banking facilities but will be getting access to technology that will enable cryptocurrencies. I think you bang those two things together, and which is going to be happening over the next couple of years quite easily. I can see another parabolic run, quite frankly. I can't see how anything else could happen. And as more and more people are looking for alternatives and ways to hedge against losing, money in the stock markets and bonds and interest in banks. I mean, the days of getting decent interest in a term deposit are gone. They just don't exist anymore. You can't even earn enough interest in the bank account to beat inflation, which is also very low. So people are going to look for alternatives, and I think that the cryptocurrency space obviously provides that. And so I think these figures here are very, very conservative, and I don't see any issues in hitting those figures. And I'd suggest much earlier than 2023 or 2025, that's for sure. And these sort of projects certainly help bring attention to the world. And as we've spoken about, the Facebook Libra coin, and certainly the challenges that it's going to face in getting ahead, getting live. But what it is doing is it's raising awareness right around the world. And again, another country that is concerned about the threats to its own monetary policy and its own sovereign currency. And so the Swiss National Bank has come out and have made some comments that that it could impact their own stability, their currency. The stability of their currency. And they say as long as prices, wages, and loans are set in Swiss francs, the SNB, which is the Swiss National Bank, can influence incentives for savers and borrowers via its monetary policy and thus ensure price stability over the medium term. And that's what they're trying to achieve, right? However, if these other coins come into place, and as I've talked about, if people are trying to get incentives for saving, and they're not going to get it in their traditional banks, they're going to be looking for alternatives. And there's certainly, while I don't believe Libra is one of those type of alternatives, they will certainly enable if they get ahead, they will enable a very easy medium of exchange between everyone on Facebook, for example. And as we know, there's 2 billion odd people on Facebook, so there's a strong use case that could be dealt there. But what it does do is it introduces people to the concepts of cryptocurrency, and it helps people realise that there is an alternative. And that's just like we almost call it the gateway drug, right? People will hear about this and they go, oh, what's all this about? And then they'll hopefully learn a bit more, and then they'll realise, oh, there's actually better alternatives to Libra. And oh, what's this Bitcoin thing? And what does that do? And it will lead people down that road. And but all of that will take it'll take people away from these the sovereign currencies, and that's obviously what the powers to be are concerned about. And I don't blame them; they should be concerned because I definitely see the use case of them being replaced. So, but quite frankly, they shouldn't have screwed it up in the first place, and then we wouldn't have been looking for alternatives. That's basically what it boils down to. But as always, there's always the negative side, and there's an article here about crypto, cash, and drugs, and because you listen to a lot of the regulators and the government, the powers to be, and the financial people, they love to throw out the FUD about cryptocurrencies just used for illegal means, and it's like, well, I'm sorry, but cash is by far the greater medium of exchange for illegal use. And it's an interesting article. They've done a pretty good job, and they've talked about where it sort of started and where the US started to clamp down on it. And one of the things that they do actually talk about it here, where and it's quite interesting that I think it's a bit lower. The largest coin, the most popular cryptocurrency on the darknet is still Bitcoin, which is really surprising to me because Bitcoin is not anonymous. And it's pseudo-anonymous. I shouldn't say it's not anonymous, but it's traceable. This is the thing. Because Bitcoin is an open public blockchain that anybody can view, right, all those transactions are visible on the blockchain. Right? So the question is, how do you then associate an individual with a wallet, a Bitcoin wallet? And look, there are ways and means to do that, right? Because nearly everything you do on the web is traceable. There are ways to make yourself anonymous, and people are obviously doing that to a large degree. But they have said here that, and as they said here, the challenge for drug traffickers is how to cash out the proceeds of their sales. So most cryptocurrency exchanges will make use of cryptocurrency transaction monitoring tools, such as Elliptics, which is an example of one, which use blockchain analysis to determine where the funds are coming from sources such as dark markets. So there are ways and means to analyse these transactions and determine where they've come from. And certainly it's those on-ramps, the fiat currency on-ramps and off-ramps, is where the regulators are targeting. Right? So if they do need to get the Bitcoin into a fiat currency, they need an exchange or some mechanism to do that, or a person-to-person transaction, which is probably what most of them will do. But it's not it's not overly, it's not easy, right? So cash is still by far the easiest mechanism for criminals to transact and remain anonymous, right? The interesting thing is that the privacy coins, which is the one I would have expected to have been a lot more popular, are still only cited as being about 4% of the transactions, and which I found quite interesting. So it was. So they talk about is cryptocurrencies the best payment? And actually, as we just talked about, they are less. Actually, here it is. The comment is cryptocurrencies are far less anonymous and less private than many people in the drug trade might hope. The analytical methods that we have developed for the Bitcoin blockchain allow a lot of the illegal activity to be identified and monitored. Continued raids and crackdowns by law enforcement agencies also speak to the ability of authorities to track at least some of the illegal activity in Bitcoin and other cryptocurrencies. And this is what I've been saying all along. It's and whether it's because I don't know, maybe some of the criminals aren't that tech savvy and they don't realise that Bitcoin's actually quite traceable. I don't know, but from a lot of the policing jurisdictions, they actually would prefer criminals use cryptocurrencies because in a lot of cases it actually helps them track them down far more than cash. Cash is far more difficult to trace. So it's more of the FUD, but it's actually quite a good article, that one. It does show a good balance between two. But look, this is the other thing. Wherever there is money, there are going to be criminals, right? Now, whether it's cash or any other cryptocurrency or any other form of medium of exchange that you want to use, if there is a way to exchange value, the criminals will find a way to use it. Doesn't matter, right? And so to point to this as a reason not to use cryptocurrencies is ludicrous, right? Because you'll never stop it. Never stop it. Now, slightly different tact. I like to watch what's going on in China because there's such a pivotal economy for obviously us here in Australia, but globally, right? Because so much of the manufacturing is happening out of China. They're one of the major powers for the economy in terms of the size of their economy. And this article sort of really, I suppose, shows light into the fact that the China economy is not as strong as we may have been led to believe. And so it's I suppose a bit of a warning sign to say, especially for us in Australia, we are very reliant on the Chinese economy, because I think they're a leading export trading partner. So and a lot of what kept Australia afloat through the GFC back in 2008 was our strong exports, and China was our leading trading partner in that respect. So if we're heading into another global economic crisis or slowdown or recession or whatever you want to call it, if we, especially here in Australia, if we don't have the strength or that demand for our products, then we may not be as protected as we were before, right? So one of the interesting things I did also see here was that the fact that they're reducing their reserve requirement ratio for their banks, right? So if you understand fractional reserve banking, and if you don't, I strongly recommend you go and watch Michael Maloney's series, The Hidden Secrets of Money. Explains everything about our financial system and where we've come from and where we are now, and why it's such a house of cards and a problem. But fractional reserve banking just basically means the bank only needs to hold a certain amount in reserve, and then it can lend out multiple times more of that amount than it actually has in the bank, which is fine until everybody wants to get out their money, because if there is a run on the banks won't have enough money to provide that, right? And that is what creates instability in the banking sector, right? So around the world, there's certain levels that are being required, I suppose. And here in Australia, we're currently sitting at about 10.5%. But I believe APRA has now said, look, we'd prefer another 3 to 5% on top of that. So and I think I did bring up a chart. Yeah, I did. So here our banks are sitting about 10.5%, but APRA wants us to getting us up to about 15%. New Zealand is actually higher than Australia. So that's the minimum capital requirements that our regulators require for our banks here in Australia. Now in China, they're dropping it a little bit, but for larger organisations, they're going to be dropping to 13%, which is sort of where we're trying to bring our Australian markets up to. So they're already higher than Australia, but because of the belief here in the system is that because of the risk to the economy and liquidity, they actually want to drop that level down and try and get more money back into the economy, which is really interesting. So it says here, PBOC officials are attempting to spur lending and economic activity and financial support as the world's second largest economy continues to slump amid its trade war with the US. Right? So this is part of as well as the fact that they've dropped the value of the yuan. It was one of the things they've also done, and so now they're doing this as well to try and get more money into the economy. So the other comment that was, because this has come from an exiled Chinese billionaire, right? And his statement here was that, put simply, the Chinese economy is one giant Ponzi scheme that depends on new investors to cover the bad debt, mask its weakness, and con the rest of the world. So that's really interesting. And he goes on to say that the revenues derived from this Ponzi scheme he's talking about are used to launder money from the nation's leaders and well-connected elite. This is what modern-day communism looks like. So that's a really interesting view, and it's a concerning view. So while globally we already know that the Chinese economy is slowing, right? This guy's actually come out and said, yeah, it's actually a lot worse than we think, right? So yeah, very interesting times ahead. So look, that might do this. That's all I really wanted to talk about today. And I'm sure either this afternoon or tomorrow morning, the two crazy guys will be back as a team again, and we will give you some more news and updates. All right, folks, well, I hope you have a crazy old day, and we will talk to you soon.